Good morning and welcome to Data Explorers Daily Securities Lending Update. I'm Len Welter, Chief Technology Officer. In order to analyze the changes in the securities lending market, Data Explorers developed a new index methodology called DESLI, which stands for Data Explorers Securities Lending Index. The indices track the change in loans in relation to shares outstanding in the company, which is a good proxy for short interest. The advantage of this methodology is that it's not impacted by changes in price or by changes in trade volume, so securities lending activity is not obscured by cash lending movements. The index we're looking at today is the DESLI Global 50, which tracks the securities lending loan base for the 50 largest market capitalized companies in the global traditional securities lending markets. With a market capitalization of approximately $5.3 trillion as of the 12th of January 2009, the index is a broad-based measure of short interest across global large-cap stocks. This index has a base of 100 as of the 2nd of January 2008. Now, as you can see from the graph, the DESLI 50 saw a high degree of volatility throughout 2008. It hit a 52-week high around about the 22nd of March 2008. However, some of this increase was due to the European dividend season. A more significant trend can be seen in September as regulatory bodies around the world implemented short sale bans on financials and banking stocks. The DESLI Global 50 has a low weighting in banking stocks, roughly only 7%, so it would be difficult to argue that the bans were the sole cause for the 25% decrease in the index level throughout this period. It's especially telling given that the DESLI Global 50 has a relatively high weighting in oil and gas stocks, roughly 18%, that the index fell through September even as crude oil is falling from the record highs it saw over the summer. In normal market conditions, you'd expect an increase in short position on oil names, which would cause an increase in the overall index level. It can be inferred, when the index dropped below 100, that the hedge funds were in the process of pulling back short exposure during a time of extreme market uncertainty. The DESLI Global 50 only began to rise after the market saw a brief rally towards the end of October, which was followed by the November sell-off in equities markets around the world. Index peaked on the same day that the S&P 500, Dow Jones Eurostock 50, and the ASX 20 all hit new 52-week lows. Since then, we've seen a 36% drop in the DESLI Global 50 to a 52-week low of 90.23 on the 8th of January 2009. From this, it can be assumed that the hedge funds have been employing restricted leverage and keeping a tight rein on shorts and not willing to take positions against the market trends. We're going to continue to track the DESLI Global 50 and report on this from time to time in this video series. But if you'd like to see more information on this, please go to our website, www.dataexplorers.com. Thank you very much.